Welcome to TradeStation for our Friday morning market briefing on Friday, April 27th, 2018. We are waiting the arrival of our presenter, Mr. Sam Seiden of OTA. He has not checked in with us yet. However, let's get a few things out of the way. Hopefully Sam has the opportunity to log in or sends his emissary to present some of the to help us get ready in the morning briefing. There was a sharp rise in spending in the first quarter, and that helped keep the first quarter gross domestic product report in the respectable range at an annualized 2.3% rate, and 0.3 above Econoday's consensus. Service spending contributed a full point to the result and offset a sharp decline in spending on durables. Consumer spending in total rose at a 1.1% rate. That's the positive number. Kim Jong-un became the first North Korean leader to cross the border into the South Korea today in a breakthrough in the nuclear-armed peninsula. They declared to end the war this year and aim for complete denuclearization. While the markets have welcomed the meeting and the announcements, there is still a view that a potential summit between the North Korean leader and President Trump is a bigger event. Overnight, the Asia-Pacific Index rose 0.6%. Japan's Topix Index closed 3% higher after the Bank of Japan left its policy stance unchanged. In Europe, the Stoxx 600 Index was broadly unchanged at 5:30 a.m. Eastern Time, with the gauge on track for its fifth consecutive week of gains. The S&P futures were broadly unchanged. The 10-year yield on our U.S. Treasury was 2.970, and gold was slightly higher. Tech earnings continued today, and as some of the earnings yesterday, Amazon, Intel, and Microsoft all beat expectations. Today is the turn of big oil companies to dominate those proceedings, with Exxon, Chevron both reporting. So remember that everything we talk about here at the morning market briefing is for educational purposes only. All symbols and trading ideas discussed are for demonstration purposes. They're not recommendations. This presentation is not an offer or a solicitation anywhere where we're not authorized to do business, including but not limited to Hong Kong and Japan. I have posted in the chat panel a couple of pieces of disclosure information regarding the risks and characteristics of the standardized options and other asset classes that we cover here at TradeStation. I urge you to take a look at those at your convenience. Our presenter this morning is Sam Seiden, the Chief Education Products and Services Officer at the Online Trading Academy. He's well known to everybody that's checked in here this morning, and is one of the top educators in our industry. I want to turn things over to him right away.
Okay. Again, sorry for the delay. Barely could make it here. I'm still having connection issues, but let's see if we can get this going. I had a session earlier today. Worked out okay, but before then, during then, since then, I've had some issues here. So let's see how we do. You should be able to see the charts. Yeah, no, thanks, Nick. Usually it's a lot easier than this, but everybody see the charts okay? And sound should be all right. All right, thanks. How you doing, Dennis? Good to see you. All right, let's get started. So I'm just going to, given that we're a little bit behind here, I'm going to prioritize by just the really quality opportunities that we have in front of us today. The first thing, and probably most important thing to focus on, is the dollar, and we'll spend less than a minute here. I want to make sure, and I'm sure most of you have seen this, where the dollar is at in the larger time frame. And a couple thoughts here. This isn't just a slam dunk, oh, it's into supply, let's short it, and let's buy every other currency. Always be careful having that thought. Always consider the other side. That's probably one of the most important little tips I can give you that you might never read in a book or anything. But This could certainly be fine and all that, but when you're when when you and me and everybody is so sure that the market's going to go one direction because of whatever, always stop for a minute and consider, what if that doesn't happen? And is there any kind of argument for the other side, right? And at the end of the day, this is a game of odds. So, but nevertheless, level looks fine. There is a little bit of demand below this. So that's kind of the caveat here. When we back out to the bigger time frames, for example, this is, we're entering a big, ugly area. No question in my mind that price is I mean, it could, but price usually doesn't just trade right through a level like this. Um, Likely to be pullbacks, could fall quite a bit, but there is a little bit of demand just below, sitting just below 91, or let's just call it 91, right? So that's only 80 cents lower from where we're at now. So keep an eye on that. Okay. Yeah, Pip, a little bit of both. And don't drive yourself crazy. At the end of the day, stick to the rules. And as long as you're holding your profits to 3, 4, 5 to 1, 10 to 1, whatever the chart's offering you, um, having a loss here and there is really no big deal, and it's part of the game. So with the dollar into supply, and then when we investigate some of the demand zones below, on bigger time frames, this 91.50 looks great, but you come down to smaller time frames, it's kind of an ugly, choppy area that really wouldn't qualify for all that much. Okay. Yeah, and Dennis is mentioning the biggest reason not to enter a trade. That would be That would be reason number one. Would be the lack of a clear profit zone. From there, let's go into some currencies. I want to really focus on just two, and we can come back to the FX markets in a little bit if we have more time. Let's go to the 4-hour chart. This is an area we've been watching in other sessions, and if you look at the 4-hour, and we're looking at the Aussie dollar, not only has it come down to a quality, fresh demand zone, but it's the demand zone that kicked off this whole move, back over here, right in February. Or, I'm sorry, beginning of the year, end of the year, beginning of the year in the Aussie dollar. We've just came back to that, and obviously we're trading off this. I wish we were having this session a couple days ago, but we have them on Fridays. So if the Aussie dollar does back up a little bit into here, and the dollar's up into supply, dollar falls, Aussie dollar up, everything's set up for for the Aussie dollar to have a nice little move here. We certainly have some supply coming in at 76 even, all of this. But the level where we'd want to get short at is up here closer to 76.50. Okay, 76.50. Let's go over to the euro. We're going to stay on our 4-hour chart when we go to the euro. Same thing here. What I like about the euro is it barely touched this level and took off. So most of the time you're going to come back down to that level, test it again, go a little bit deeper, and then the real move comes. We'll watch for that to happen here in the euro. So just keep that 120.95 price point in your head and watch for prices to come back to there. We'd look to take another entry just below that. In the meantime, as a day trader, if you're a day trader, we now know where price is in the bigger picture in the euro. We know where price is in the bigger picture in the Aussie dollar. I'm sorry, the euro and the dollar, right? The dollar, U.S. dollar. So now we come down to, for example, the 2-minute chart or 5-minute chart. Here are a couple little levels that, as a day trader, we can look to buy here. And these levels together are offering a decent little profit zone. Okay. Remember, you've got larger time frame euro demand just below this. You have larger time frame dollar supply that we're at right now. So that's just giving some pretty good odds to this little demand zone, or these two little demand zones sitting on top of each other. So we're looking at the euro futures. The nearest opposing supply zone is right up here about 121.40. Okay. So we put a profit target at about 35. And I'll do that right here. Okay, that's right there at that 35 mark. Okay, good. So you got in at that larger time frame level, it looks like. Okay. Yeah. So the again right up here, the 121.50 is where you're going to hit some larger time frame supply. So you're about 30 ticks away from that. All right. What you can do, I'm not a big fan of moving stops ever, but if that's something you're interested in, you would use these two new demand zones on the small time frame to move your stop up from a potential loss to, just under these demand zones. If you're not interested in taking, if you're going for a bigger move than the 50, that makes sense. Yeah, same things. Yeah, 60-minute to 4 hour exactly, Dennis. There's a bunch of levels out there on the euro. Okay. The other level that in these other sessions that we've been watching and had a trade trigger this week is, and I'm pointing it out because it's back in the zone, the bonds, 10-year note futures, right? And you can look at the ETFs if you want. Right, they're down into this. If you see where price is at right now, they just came down to this much larger daily chart, right? Time frame demand zone. In fact, I'm going to put 3 lines in this demand zone just because it's so big, and there's the meat of the level, and then there's the entire level itself. So if you have any interest in the 10-year note futures, 30-year, watch the larger time frames. Prices down into those areas. We do have supply above, but it's a little bit higher. Other markets that we are watching here. Oh, let's go back to well, before we go to the any equity index markets. Well, not that one. Corn. So soybeans have. I'll show you in a minute. Well, let me show you that first, and then I'll show you where corn is and what corn is doing. And I don't know if there's anyone here that actually trades those markets. In our other sessions there are, but here's a trade that triggered for us in soybeans. It's nearing target number 1. So just so you can see larger time frame soybeans. If you go over to corn now, this is the trade that is kind of triggering going into the weekend. Right. So if you've never traded corn, I don't suggest that you short it here and just hold it over the weekend. Make sure you know exactly what you're doing and you understand the price points and risk reward and all that. Okay. Yeah, the Fed PIP raising interest rates. Would you expect the demand zones to hold? Yeah. So a lot of that is already baked into the markets. Okay. And what you'll find if you look back the last 3-4 years, for example, you can look back past that if you want to, but if you really look at the um, all the talk and the action from the Fed and the price action of the 10-year and the 30-year, they're much more often out of alignment than in alignment. Okay, so just be aware of that. Let's go over some equity index markets. Yeah, the S&P is rising here. So I want to bring you over to a market that is probably more important to watch today than the S&P, and that's the Dow. So a trade that triggered in our other sessions overnight for us, or yesterday, I should say. This is a level we had in from yesterday's session. That barely met entry, but we're looking at the Dow Mini. This market pays $5 a point. So because the level was just touched and prices fell, suggests there is quite a bit of supply up there still. But we never want to take that same level. So we'd want to go a little bit deeper into the level. And I'd pick a number like, 75 or 80 or something like that. Somewhere in the 75 to 80 range. Now you're into fresh territory into this level, fresh sell orders that have not had a chance to be filled yet. if that makes sense. Don't know if price is going to get up there, but if it does, you've got kind of a low risk shorting opportunity there. And then we have another supply level sitting above it at the 24, call it 480, gets you up into that meat of that stuff. Yeah, next week, Nitin, in I think almost all the sessions I do, we're gonna have a lot of labels, and there's a few new things I'm doing that I think will help everybody. Okay, let's look at the DAX. I think we want to look at the DAX. Let me pull it up here. Yeah, what I wanted to point your eye to is the hourly chart of the DAX. Again, if you've never traded the DAX, be careful. It's a lower volume, really big money market. All right, so we've already been to this level. This is the level we've been trading in those other sessions this week. So we've traded from supply down to demand, back up to supply again. We'd look for prices to go deeper into the level this time before even thinking of a short entry. Um, and if you want to stay on the high probability, low risk, high reward side, you'd wait for the 12.815. That's 12.815. Yeah, so one of the things that I kind of preach all week in the other sessions I do is to be very careful of any supply or demand levels that are inside ranges, and we've had a number of those. If you see, we're almost always catching the turns at the extremes, right? We get those, and those have huge profit zones. Once that move happens, now you're left with a bunch of little levels in the middle, and those are the levels that are, I don't know exactly what the numbers are, but let's say they're 50-50 at best. Um, where the other ones are quite a bit higher than that when you look at the win rate. Um, So yeah, I'd be very careful. And during the sessions I do during the week, I'm very clear to say, look, I'm not taking that level in the middle because levels inside of ranges, by definition, don't have big supply demand imbalances, and that's the only thing that causes price to turn. So I'm with you there. Yeah, SD, we went over YM for quite a bit. So there's definitely a couple key levels there. When we look at gold, we've had this level in for a few days. Want to remind you of a couple things. Number one, we would not short against this level again. It's worked out really well for us. What we would do is look to be a buyer down here at demand or take profits um, as prices come down to the 1314 level. That's 1314 in gold. Okay. Let me look at my little list here. Yeah, as far as the NASDAQ goes, we probably don't need to spend too much time here. But what you need to be aware of is, on the 4-hour chart, we're just nearing this supply zone at 67.67. That's 67.67. You can go down to a smaller time frame and refine it a little bit if you want. Um, and this is another level that we had in our sessions. But again, so this is exactly what I was talking about. I would expect this level is good enough to risk money on, in my opinion, from the rules that we put out here. But does it carry the same odds as that level? No, right? Or that level, a level above? No, only because it's inside of that recent range. Okay. And if there was such a big supply demand imbalance inside the recent range, the picture would look different. But this does meet the criteria, and risk reward wise, it's fine. It's just odds wise, it's just a little a little low. Yeah, I can go back to see a bunch of questions about the down mini. So yeah, for those that came a little bit late, we've been focused on this 10-minute chart. Here's a level from our other sessions where met entry, but again, we'd be looking at 24,375 to 380 if prices came back up here again as a possible entry point to the short side. And if we go to there's the 4-hour. Again, not a whole lot to look at there, right? I think a lot of what you want to see is found on that 10-minute chart. Okay? And then the 4-hour of the Nasdaq, and corn is that other one, and then the gold demand zones. Then of course we spent most of our time here today on the dollar, Aussie dollar opportunity, and then that really good euro opportunity. Both of those can be found on the 4-hour chart. Make sense? Yep, we could certainly take a look at Apple. Let's do that. Earnings next week, so that should be moving. I don't usually look at Apple on this computer, this workspace here, but let's do it. So yeah, I mean, Apple looks like a bunch of other markets in this space where I think one thing that's really important to understand is the health of a company. Yeah, this one. Anybody do an options position here, by the way? I see you mentioned that 178. Yeah, great level there. Fantastic level. So remember, the health of a company and how you make money buying and selling the stock of that company are two completely separate conversations, right? Good news in a stock typically brings in buyers, which causes price to rise until you can reach a price point where all those buy orders can be filled. And that's usually at supply, right? That's where the sell orders are, to fill those buy orders. Bad news in a stock typically brings in sellers that causes price to drop until price can find a level where you can fill those sell orders, which is where the buy orders are, demand, and then prices rally. Okay, so all we want is for prices to move into, and from our levels. So yeah, not a whole lot to talk about with Apple, other than you'd have to come down to smaller time frames if you're looking for a position. So if we can get a rally up to 173 to 174, so this 173 to 174 area in here, this would be another place to put on a type of position that you'd put on at the 178, right? You do the in the money puts. You can do a bear call spread, or you can do out of the money puts. I choose the third choice there. It's typically what I do. Okay. Yeah, and again, just because the stock doesn't continue to go higher at the pace it's gone over the past few years, doesn't mean anything with Apple has changed as far as how strong it is and how good it is. It just means price has reached a level where supply exceeds demand for a little bit. That's all. Now, for those that have been watching markets for years, this wide and whippy sideways action on the daily chart, what typically comes after that? So you've had a nice, multi year uptrend. Now you have this wide and whippy action up here. Typically, not always, what comes after that? Yeah, the downtrend. Okay. And when we look at the much larger time frames, you saw here, right? Uptrend, wide and whippy sideways action, big drop in price. Much bigger uptrend, much bigger wide and whippy action, and you don't really have any demand until down in here. Yeah, I'm with you there, Dennis. And that I could see it testing below that too. All right. So if you have any questions, you can always email me at ssiden@tradingacademy.com. There's my email address. I'll turn it back over to Don here. I know we're out of time and the market's about to open, but everybody have a great day and a great weekend. And watch that dollar. All right.